the numbers are bogus that the government's giving us. And there is an argument to be made that we've been in a recession literally since 2010, 2011, after the recovery from 2008, because we've been on life support ever since. And why is it that the financial system slash real economy, why is it that they can't stand on their own? And the answer to that is there's too much debt. The final schmuck is going to be the Federal Reserve. I mean, they are going to be the buyer of last and only resort. And that is outright monetization. Well, what will happen is the value of the dollar will decline. And we already can see that incomes are not keeping up with inflation. So the middle class is being pinched on a daily basis. And then all of a sudden they wake up one morning and their dollar only buys 70% of what it did the day before, or 60 or 50 or 40. Who knows how bad the dollar is going to crash. But when it does, purchasing power is going to collapse. If you want to measure the dollar, look at a cup of coffee. Look at an ounce of gold. The dollar has imploded.
Hello and welcome back to Soar Financially, a channel where we discuss the macro to understand the micro. My name is Kai Hoffman. I'm the @JR Mining Guy on Twitter, and of course your host for this conversation. And I'm looking forward to welcoming back Bill Holter, BillHolter.com. He's a precious metals trader and expert, and he's been in the space for over 30 years. Bill, you have to correct me in a second here, but we've had him on the show a number of times, and it's time to follow up because the last episode with him we aired on my birthday, February 25th, and it's time to catch up with him. A lot has happened over the summer. We've had a Fed rate cut in between our last conversation and today, and lots more happening. So BRICs meetings on the agenda this week in Kazan, Russia. We have a U.S. election coming up. We have another Fed meeting coming up in 16 days. So lots to digest, lots to talk about, and I'm looking forward to this discussion. And you guys know the spiel. We really appreciate it. You don't have to pay us for anything. This is free educational content. If you want to support us, hit that like and subscribe button. It helps us out tremendously. Thank you so much. Now, Bill, it is great to welcome you back on the program. It's good to see you. Thanks so much for making the time again.
Thanks for having me back, Kai.
Absolutely. Yeah, really looking forward to this conversation, Bill. Lots to catch up on. And let's start right at the top. Let's start at the beginning. We spoke 7 months ago. A lot has happened since. Let's discuss the state of the economy first before we dive into some of the details. But how is it with the economy? How are we doing right now, Bill?
Well, you've got government numbers telling you everything is fine. But with your own two eyes, you can see that there's all kinds of problems out there. I mean, you've got even companies even like Target talking about the consumer is tapped out. So, I mean, we're going to know very shortly because we got a Christmas season coming up. But it looks to me like the consumer is tapped out. I mean, I've seen more precious metal sales, nothing big, but people raising money just to live on, which, like I've not seen it in 15 years. So there's definitely tightness out there. The numbers are bogus that the government's giving us. And there is an argument to be made that we've been in a recession literally since 2010, 2011, after the recovery from 2008, because we've been on life support ever since. And why is it that the financial system slash real economy, why is it that they can't stand on their own? And the answer to that is there's too much debt. But like I said, there's an argument to be made that we've basically flatlined from that point forward.
Yeah, it's an interesting discussion. I think maybe we'll start there, Bill. The government's, I wouldn't even call it stimulus, but the crutches the government uses, meaning the deficit spending, just to keep the economy afloat. $2 trillion this year alone is a big number. How sustainable is that? And is there even, or what happens if they stop spending like drunken sailors?
Well, no, it's not sustainable. And it's not sustainable because the amount of interest we're paying out comes to pretty close to 25% of tax revenues. So, I mean, that's only going to increase. as older bonds that are paying much lower rates mature and get rolled over into bonds that are higher rates, that number of 1.1 trillion is going to go to 1.5 this year, and probably 2 trillion next year. So no, it is not sustainable, and it's math. I mean, this is not my opinion or your opinion. It's just math. It is not sustainable.
Get ready for Germany's premier mining investment event. Deutsche Goldmesse returns to the Westin Grand Frankfurt on November 21st and 22nd. Discover up to 30 mining companies, hear from internationally renowned keynote speakers, and network with influential figures in the industry. Experience engaging keynote sessions, expert panel discussions, and one-on-one meetings with company executives. This is the must-attend event for anyone in the mining industry. Secure your spot today and register for free at www.deutschegoldmesse.com or www.germangoldshow.com. We're looking forward to seeing you. No, we've had Michael Howell here on the program recently, and he wrote in the Financial Times about the debt wall of worry that we're about to hit here next year, pretty much, and it is turning into a liquidity crisis at some point because somebody needs to refinance and finance that debt and that spending, and it seems like there's less and less buyers out there, and we need to talk about monetization of debt here, and who will buy it? Who's going to be the next schmuck that we're going to sell it to, right? Pardon my French here, but who's the next one? And junior mining is like there's always an idiot born every day that you can sell your junior mining stock to, is one of those sayings. But who's that idiot we can sell the bonds to tomorrow?
Well, the final schmuck is going to be the Federal Reserve. I mean, they are going to be the buyer of last and only resort, and that is outright monetization. I mean, you mentioned that the deficit this year is 2 trillion. What if the government didn't borrow and spend 2 trillion into the economy? What would the numbers look like? It would look like we're in a depression. I mean, that's what, 6-7% of GDP. What would the economy have looked like for the last 15 years, or for that matter, since the 1970s? What would the economy have looked like if it did not have the additional federal spending? It was all borrowed money. What if that money was not spent into the economy? I mean, we would not have had any growth whatsoever.
Right now, we're showing 3% growth, but and those are the official numbers, Bill. I understand that that's what the government shows. It's fairly decent sized growth, but it's propped up artificially, and the government spending we all know is inefficient. So. But by definition, it is not sustainable, sort of what you're saying. And where's that growth then coming from?
What's the number?
Right, 3% is the official GDP number, right?
No. What I'm saying is, what's the number if you take 2 trillion out of it? If you take the 2 trillion deficit out of it, the growth is negative. We're contracting. We are not expanding.
And a lot of that spending is going into government jobs and just keeping the government afloat. We've seen the jobs report. A third or so of the jobs created just last month, I think, was 175,000 government jobs created.
Right.
And we could talk about inflationary pressures or creating inflation by creating those jobs as well. Is that do you have a theory on that? Like, are those government jobs creating inflation, or to a degree they are because we have to finance them?
Well, government spending, forget about the jobs, just government spending overall creates inflation because they are bidding up goods and services. They're propping the system up. They've been doing that every single day since 2008. The economy, the financial system, they are not sustainable without the federal deficits.
They can't be. They can't. It doesn't work. And we need to talk about that. I circled the 25% debt service, or the 25% of the tax revenue goes to interest payments. You mentioned that. What number is like? I keep coming back to the word sustainable. I need to come up with a different word. But how high can that go? I had a guest on over the summer who said, "Don't worry about it. The tax revenue is covering all our interest payments. We're only at 25 or 20% at the time.
That's
Don't
stupid.
worry about it. It's healthy, right? It's
No, that's stupid. That's stupid is what that is. Anybody, I mean, think about this. You're talking about a, one out of every $4 is of tax revenue is not usable. You can't use it because you owe it. So I don't know at what number does it implode? 30%, 40%, 50%. The bottom line is it cannot be reversed. And it doesn't matter whether Kamala wins or Trump wins. It matters not who becomes the president. It matters not who has power in Congress after this election. The math is the math, and this is not reversible. And whoever told you that 25%, oh, big deal, well, I'm sorry. I have no idea who it is, so I'm not attacking someone personally, but I'm just going to say they are a complete fool.
No, it makes sense. Like
usually I don't get pissed off like this, but somebody who says, 25% of tax revenues going to interest, that's perfectly fine and normal. No, it's not.
It can't be. It's like when I mortgage my house or so, my interest can't be 25% of my salary. The interest.
Right.
Debt repayment in general is a different thing, but interest alone, I think that's what we're talking about here. That if that's 25% of your income, of your revenue, that number is too high. Like your mortgage in total with interest payments should be maybe 25% in total.
Well, and that's just the deficit. That doesn't count Medicare. It doesn't count Medicaid.
Exactly.
It doesn't count Social Security. It doesn't count anything of the total 200 trillion of debt and loan guarantees, social programs, etc. So the whole the number of 35 trillion, that's wrong. The number is really 200 trillion is what the US government is on the hook for.
Bill, it's like I think the debt discussion is an interesting one because it's a powder keg. Nobody's really wanting to talk about it or light a fuse on it, but we need to discuss like what happens if somebody calls the debt, and maybe to understand that question, we need to understand who owns the U.S. debt as well. Can it even be called on, or do you see it? Is it realistic? Like when somebody calls you up, it's like if you're insolvent, you can't pay us. Is that even realistic? That hypothesis here?
No, the debt cannot be called. I mean, treasury bonds are not puttable or callable. But let me put it this way. The government is going to default because they cannot pay that money back in current terms. What they could do is they could print $35 trillion and put it in the money supply. But what will that do? That will absolutely destroy the dollar. So they're not going to default in the form of a non-payment, but they're going to default because the dollar is going to collapse in purchasing power, and people are going to get paid back with nothing.
I think we're seeing that already. It's like not yes. on a scale already, but over the last years, decades, the U.S. dollar has lost so much value in comparison to other currencies or even gold.
Yeah, Kai, let me just mention, your average watcher or listener is going to say, oh, no, well, the dollar hasn't lost value. Look at the U.S. dollar index. Well, that's a piece of shit, the dollar, measured by various pieces of crap all over the world, other currencies, the euro, the yen, the pound, etc. If you want to measure the dollar, look at a cup of coffee. Look at an ounce of gold. The dollar has imploded. I mean, the dollar is down better than 90% since January 1st, 2000. At that point in time, gold was about $260, $270 an ounce. Now it's $27.50. So it's gone up better. Gold costs more than 10 times more than it did in the year 2000. That is a decline of 90%.
I want to talk with you about gold in detail in a minute here, Bill, but let's stay on the U.S. dollar, for example. Is the U.S. dollar under attack? I know it's a very provocative question, but it seems like ever since the U.S. threatened Russia and has kicked them out of the Swiss system, that the de-dollarization topic keeps coming up, and we hear more and more about it, sometimes a bit more, sometimes a bit less. We have a BRICS meeting, of course, coming up this week, so de-dollarization has popped up in the news a bit more again. Where do you stand on that topic of de-dollarization? What is the trend? What are you seeing right now?
Yeah, I mean, you could call it an attack if you want. It's basically the rest of the world is walking away from the dollar because they know, I mean, they can do math just as well or better than you and I can. They do the math and they're like, the dollar is unsustainable. We import $1 trillion worth of real stuff every year, and we export $1 trillion that have no backing, and they're free entirely to be printed. So the world is moving away from dollars. There's no question about it. You can call it an attack if you want. I don't think that that's the way the BRICS are trying to portray it, because they don't want an actual war. They just want free and fair settlement. And you mentioned Russia being kicked out of the SWIFT system. If you look at a chart from a year ago, last October, gold was $1,700 an ounce. Now it's over $2,700. Gold started moving, and it's pretty much been like a bulldozer in first gear for an entire year. Gold has gone higher because a year ago in October is when the U.S. government started talking about taking 300 billion of Russian treasury reserves and basically stealing them. And what's happened is other countries looked at that and said, hey, wait a minute. If they can do this to Russia, they can do it to us. So you've seen less buying of U.S. treasuries, and you've seen selling of U.S. treasuries by foreign nations that understand where this is going to go. Oil and trade has been settled in dollars since 1971 or 73, the petrodollar. What's going to happen is once the BRICS unit comes forth, you're going to have a third or better than a third of the world is going to do all their trade transactions and trade settlements in non-dollars. So, I mean, that's a huge amount of demand, which it will no longer be necessary. And those countries that have stockpiled dollars in order to settle trade, they're just going to offload those dollars.
Curious question popped into my head. Like, as a U.S. consumer, or like somebody who's watching our interview, we've got a lot of Australian viewers, a lot of British and German viewers, of course, as well. But how is that going to affect, let's say, the average Jane and Joe six-pack in the U.S., for example, when that happens? Because I've been reading more and more that the BRICS is really dividing the world. Or sorry, not the BRICS, but the world is being divided. All right, we have the West and we have the BRICS nations and their friends. How is that playing out? In the case of the US dollar, for example, how will I feel that?
Well, what will happen is the value of the dollar will decline. And we already can see that incomes are not keeping up with inflation. So the middle class is being pinched on a daily basis. And then all of a sudden they wake up one morning and their dollar only buys 70% of what it did the day before, or 60 or 50 or 40. Who knows how bad the dollar is going to crash. But when it does, purchasing power is going to collapse, but incomes are not going to go up. So you're looking at a situation where your standard of living lives and dies with the value of the dollar. And if the value of the dollar collapses, then the standard of living for the average person in the United States is going to outright collapse.
Now, on the collapse topic, I'm really curious. Like, how close are we to an economic collapse? Like, let's be honest. Like, if you were to put a time, if you were to use the clock or so as an example, like, how close are we? Do you think
it should have already happened in a world that's not propped up, in a world that's, I mean, everything that pretty much all the news, all the government statistics, everything's bullshit. In a world that's not propped up, and I mean, it's propped up by the Federal Reserve, it's propped up by the U.S. Treasury with the deficits, it's propped up with deficit spending worldwide. In a system that was not propped up, it would have already happened.
Yeah, good point. I think it's an interesting question. What would have happened, or what would the world look like without the stimulus that we're just keep pumping into it right now? It's just there's no textbook where we could look up. Okay, this is what happens in this case because it's not textbook what we're seeing right now. Like, what's the best playbook that you would use to sort of get through this economic situation right now, Bill?
Well, I mean, I don't think there's any getting through this economic situation. The system's going to go down, and we're going to go to barter for who knows, 2 weeks, 2 months. God forbid, 2 years. We go to barter for 2 years. You're going to see a good chunk of the population die from lack of food.
That's drastic, but it probably is the ultimate scenario here in the big let's call it the end game, right? That's what it eventually boiled down to, right?
Right. One
Interesting.
other thing. One other thing to add to that, Kai, is that everybody watching this or listening to this should absolutely read and find out and understand what the great taking is. Once these markets implode, you're going to see banks, you're going to see brokers, you're going to see insurance companies that fail. And once they fail, people are going to find out that their money is not their money. Their money, if you put money into a bank, you're not a depositor. You are a lender, and you are the most junior lender there is. So, along with waking up one morning and finding out that your dollar only buys 70% of what it did the day before, people are going to find out they don't have any dollars left because they got bailed in.
Curious, like on the currency side, like how is this going to play out? I find it an interesting discussion because I just read up on CBDCs again. Apparently, it's not on the docket for this U.S. election, and Republicans have taken it off, and I'm not sure the Democrats are even considering it anymore. But is that maybe the next step? Once we are through that crisis, will CBDCs get announced? Is that something you'll envision or you can see?
Well, I don't think I really don't even think that they'll talk about it ahead of time. Once the markets collapse and people get bailed in, and the population is going to beg for a solution. And that solution is going to be the central bank digital currency, which is still going to be fiat, backed by nothing. And that will also fail. But that's how they're going to try to introduce the CBDC, because as they say, never let a good crisis go to waste.
Never. It's one of my favorite sayings. Never let a good crisis go to waste. I love that.
Even though they
Talking about
even
crises,
though
I
they
think we
caused
need.
the crisis, they caused the crisis, and then they got a great idea how to fix it.
I think we've seen that playbook over the last 4
Many,
years
many
play out
times.
perfectly.
Yeah,
In
yeah,
in various forms. I have to admit there were hints, there are signs, if
right.
you want to say that, and I think we've all seen them, and it's interesting how they're all playing out, and how certain facts come to light 4 years later that we've been talking about years ago, right? And we don't need to get into specifics here, but I think we all understand what we're talking about. Couple topics I want to talk with you real quick about. The BRICS meeting we sort of touched on, but more curious, just specifically, what do you expect to come out of it, out of the meeting in Kazan? How much importance do you put on it?
Well, it's obviously important, and it's important what they say afterwards. I do not believe that they're ready to go live with the unit. I'd be surprised if they did. But I do believe that a strongly worded communique is going to be issued. And in that communique, they will probably bang the dollar and outright say, we have zero plans of using dollars for settlement. Settlement will be exclusively done through a BRICS currency. And I would like to see in that communique, and not, obviously don't know whether they will or not, but I would like to see them come out and describe what's going to back that unit. I mean, I've heard, and again, anything's possible. This is all speculation, but I've heard that they're talking about 40% backing, which I thought was on the high side, but 40% backing by gold, and then 30% and 30% by rubles and Chinese yuan. But I would love to see a description of what they're going to back the unit with, and that'll give you a better idea of what it's going to look like.
The unit is an interesting topic because it's run through the BIS, which is the Bank of International Settlement, which declared gold as one of the assets
Right, tier one.
non-par, right? Tier one, yeah, that's the term I was looking for. But for 40% backing, like let's be realistic. Like what would that entail? How many tons of gold would you need for 40% backing? That if we take the US dollars, like I've never done the math on it, but how many ounces and how many tons of gold would you need to back that? Because as you said, like I predict 40% is a bit high, despite, let's call it the shadow gold that China owns.
Well, the only way to do that would be you'd have to do the math as to what the total size of trade between all the BRICS nations is going to be. And then you've got to have enough currency to settle that trade and then plug in 40%, and that's the amount of gold. And I can tell you at current prices, there's no way that they could back 40% of the currency. I mean, you probably have to see, I don't know, pick a number. I'd have to do the math to actually come up with a number. But I mean, it should certainly be well north of $10,000 an ounce. And really, that's what's going to happen here is that the East is going to take control over the pricing mechanism of gold. And LBMA and COMEX are basically going to go away. I mean, they can put whatever numbers they want on an ounce of gold. But if the East is pricing it far higher, they'll just come in and buy every ounce that's available for sale in the West. And they'll have it delivered, and the gold will no longer be in the West. The gold has been moving from West to East now for 25 plus years.
Bill, you need to help me understand something, and that's I've got a mental blockade here, and maybe you can help me understand it. But the 40% gold, where is it supposed to come from? We all understand China owns gold. We all understand Russia owns gold, but it's not neutral. It's not neutrally owned, if that makes sense. Will those countries have to donate it to a bigger pool? And I'm trying to figure out, gold is not neutrally owned. Like, if somebody owns it and somebody wants to get something out of it. And then China owns the most, obviously, more than Russia. But when you say 40%, let's assume it's 40%. It doesn't really matter if it's 20 or 40. The point is the same. Like, are they donating gold to a bigger pool, or what would that look like?
Yeah, I don't think they're donating to a larger pool. I think what's going to happen is the gold held by BRICS nations will have to be segregated and earmarked toward the unit. How they do that, I have no idea. But no, they're not going to actually ship their gold, to one central location and say, this is the gold that's backing it. There's no way they're going to do that.
So they're not creating a second Fort Knox somewhere in the middle of Mongolia?
There will be audits, and that's the important thing. There will be independent audits. And the United States has not had an audit since 1956. So do we really have 8,300 tons of gold? And does China really only have, what's the number, 3,700 tons or whatever? No, I think China's got 10 times that. And the U.S. maybe only has 10% of what we say we have. It's impossible to know. There's no way to know.
Bill, personal question for you, and please don't take it the wrong way, but would you exchange your U.S. dollars for the unit?
Probably not. I mean, why do that? Why not exchange your U.S. dollars directly for gold or directly for silver?
Good point. No, I'm just curious because it seems attractive. If it's 40% gold backed, like the U.S. dollar immediately becomes irrelevant overnight, in my opinion, because it's actually backed by something. Right. So that was sort of the thinking behind the question. So I appreciate that. Thanks for humoring my question here, Bill. Let's stay on geopolitics for a moment here. Middle East, we're all following the news. It's seemingly heating up. Like it's already a hotbed. Just to put a term around it, but how do you see the Middle Eastern crisis and the Ukraine crisis affect global economics and the global economies for that matter? Like, we haven't talked about that yet.
Well, the fact that, looking at Ukraine, that's basically NATO versus Russia/Russia's allies. And they just recently signed, I think with China, they signed with Iran, I believe they signed with India. An attack on any of those means all of those come forth. versus NATO. And the real danger for the West is that something does actually explode and there is military action, because we're going to find out, in my opinion, that the military, uh, Western militaries do not stack up against Eastern militaries. I mean, Russia has hypersonic missiles. There's no country in the West that has hypersonic missiles. And in the words of my late partner, if you cannot catch it, you cannot kill it. So, I mean, I hope this doesn't blow up into a outright military East versus West action, because we're going to find out that the West has no clothes, and the clothes that the leaders of the West, and I'm referring to U.S. generals, U.S. admirals. I mean, these idiots are running around in high-heeled shoes and skirts. The West has gone woke, and you can't tell me that Xi Jinping or Putin or any of the Eastern leaders are going to be scared, of a bunch of tranny leaders in the West.
Tough to portray that image, I do have to admit that, but it's an
Can't get
interesting
it out of your
topic, right?
head.
It's like it's an interesting debate, right? And how it's perceived, because also perception as well plays a role, like in the whole matter.
Right.
We have to be realistic here. Bill, like, let's get back to the precious metals and see how this is all playing out, because it's the main part of our channel here, of course, is to talk about the commodities. We touched on gold a little bit. I want to just get a bit more granular, because I'm curious what your thoughts are. Like, where is this going? Like, gold has a lot of momentum right now. I'm not a technical analyst, so we don't have to look at the charts and have to draw 200-day moving averages lines and all that stuff. But, where's this all headed? Does gold have enough steam? And you mentioned people are selling gold right now to cover basics. Maybe as a part B of the question, is gold too expensive already?
Yeah, no, first off, it's only the little guy who's selling. I mean, in this year, like I said, I mean, I've seen more sales, but they're all small, 5,000, 10,000, 25, 50. Business in North America was good for the first 5 months. And then June, July, and August, it was slow. And I can tell you, it's definitely picked up in September and here in October. I mean, I've done a huge amount of sales just in the last 4 weeks alone. So big money is definitely moving into gold and silver. Uh, to speak to, does gold have the momentum? Gold is not overbought. It's close to being overbought, but like I said, gold has moved literally like a bulldozer in first gear. You haven't seen any big, huge spurts. We've not seen $100, $200 days, but those are coming. Uh, I mean, we could go on like this, and in a month or two, or even less, we get a spike. I mean, you could see $3,000 gold pretty easy. Uh, Silver broke through 32.50 on Friday. We're trading. We traded as high as what, 32 or 34 and a quarter, 34.50 today. Silver to me looks like that's going to be explosive. And I mean, all along I've said that silver would be gold on steroids, and that's just a function of the ratio. The ratio at, I think it's 81 ounces buys 1 ounce of gold now. I could easily see that in a fairly short period of time come down to the 50-40 zone, and you'd basically have a doubling of silver's action versus gold. It will outperform gold, I think, at least 2 to 1.
You brought up the gold silver ratio, so I do have to follow up. Where do you think it's going to head, and what do you think is where should it be, the gold silver ratio? Everybody has a bit of a different opinion on where the gold silver ratio should be. There's the historic anecdotes of, 13 to 1, 16 to 1. Where do you think it should be?
Yeah, I mean, for hundreds of years it was 16 to 1, and the reason being it comes out of the ground basically at 10 to 1, and because gold and silver had to be moved or transported, by carriage or mule or whatever, man discounted the price of silver, and it was agreed upon that a 16 to 1 ratio versus 10 to 1 was appropriate. It was enough of a discount to entice people to move 10 times as much silver as opposed to gold. So that's why it was discounted from 10 to 1, because that is the ratio that it comes out of the ground. I could easily see it coming down to the 20 to 30 range, and that would make sense. And an additional push to silver is that Russia announced last week or the week before that they're going to start buying silver. Well, guess what? There is no silver to buy. I mean, silver's been in a deficit now for 4 years. There's no above ground supplies where Russia's going to be able to buy their silver from. And what will end up happening is just by whatever buying they do, if it has to come off of COMEX or LBMA, those inventories, they're going to fail to deliver. And then it's game over. You get a reset of everything. And I don't know, where does gold and silver reset? I think 20 is probably a decent number. I've heard some people say that, silver is going to become more valuable than gold. And I think that's laughable.
That is hard to see, but it'll definitely catch up, and I think we're seeing that already. I wonder, now that we broke through the technical level you mentioned, 3250, silver's got lots of catching up still to do. It's still trading way below its all-time high. So I fully agree on that. Bill, I think we can also agree that gold and silver are the number one assets to own right now, given what we've discussed. But just out of curiosity, are there any other assets or asset classes that you would be even willing to consider to invest in right now? Is there anything that would that would tickle your fancy?
Right. Historically, if you know that a recession or very hard times are coming, you want to go to cash. And the ultimate cash is gold and silver. They are money. All of the fiat currencies, look at their names: the dollar, the pound, the lira, the peseta, the peso. All of those names signify a weight. And what was that weight? It was gold and silver. All of these currencies are derivatives of gold and silver. You don't want to own derivatives. You want to own the real thing.
Yeah. But just in terms of other asset classes like real estate or anything like bonds, I think we can definitely rule out. But anything else that would make sense? Like,
why?
Just to diversify the portfolio a little bit away from gold and silver. Oh,
why? Gold and silver cannot bankrupt. You hold gold and silver through the collapse, and you use your gold and silver, you use that wealth that you protected to buy up assets at pennies on the dollar, whether it be real estate. I mean, look at commercial real estate in the United States. There have been some giant office buildings, hotels. There have been some very big buildings that have changed hands at 15 cents. 10 cents. I've even heard of 6 cents on the dollar 5 or 10 years ago of what they traded for or what the appraisals were. So commercial real estate has absolutely imploded. And that's going to happen with housing. It's going to happen with all real estate. It's going to happen with all assets. And this is what I've talked about for 10 years. The end game would be inflation of everything that you need and deflation of everything that you have.
No, I think it's coming closer and closer to that point. So I agree on that, because we've been having these discussions for the last 3.5 years now, and it gets more and more complex to have these discussions. Quite honestly, as you've noticed, there's so many points we can attack this from and talk about the end game, right? Like we brought up currency, we brought up geopolitics, just to name a couple, right? Bill, I'm super appreciative of your time. Really, thank you so much for coming on. Like, where can we follow you? And quick shout out to what you're doing.
Sure. You can go to my website. It's simply billholter.com. There is a contact button. I do want to mention for anybody who's looking to prep, there is an icon up top. It's called Grizzly's Corner. There's some fabulous information on that. I think there's a dozen articles or more with actual links of where you can search for prep items. If you do want to reach me directly, you can contact my business email. It's bholter@proton.me.
Fantastic. Bill, really appreciate it. Thank you so much for coming on. And to everybody else, thank you so much here for tuning in to Soar Financially. Hope you found this conversation with Bill Holter useful and educational. If you did, the best and easiest and free way to support us is just by hitting that like and subscribe button. I know 80% of you watching are not subscribed. Helps us out tremendously. Truly, truly appreciate it. And if you haven't done so, and if you're based in Europe, make sure to join us in Frankfurt, November 21st and 22nd at the DEUTSCHE GOLDMESSE, German Gold Show in Frankfurt. And more information can be found at germangoldshow.com. Make sure to meet us there. We're really looking forward to seeing you. And of course, we'll be back with lots more here on Soar Financially. Thank you so much.